Back in 1999 and 2000, I made roughly a little over $700,000 as a freshman in college and senior in high school. I was buying pumps into the market close, selling the next morning. That was it. I had one strategy. There was a giant meteor that hit my pattern and it was obliterated. And I learned why were these penny stocks spiking so predictably. That's when the SEC started exposing boiler rooms. And the reason why the companies that I were buying would gap up the next day, because boiler rooms were calling random people at dinner time, because that's when they're most likely to be home. And they were pitching them over the phone at dinner the whole penny stock BS scheme. And people didn't know that it was a scheme. They believed it and they would buy. There was no pre-market trading back then, so all the buys would basically stack up at the market open. The market makers would gap the stock up. I was inadvertently piggybacking pumps. I had no idea, no one had any idea, but I would recognize the pattern. When that disappeared, when there were no more breakouts, I was forced to short sell. The good news is I adapted and I began making money on the same exact pattern, but later in the pattern. If there's a pump going up and then the dump comes later, I made basically my first million buying the pump. I made my second million basically shorting the dump. Because the pumps weren't working anymore, I had to find something new.